PFLT, Pennant Park. Is it a buy though? The company was founded in 2010. They invest in middle market companies, meaning companies with revenue range of 10 to 50 million. They mainly focus on companies with strong cash flow, growth potential, and attractive financials. This approach provides less risk for higher reward, providing stable stock price and dividends through the years. They have a 100% floating rate or adjustable rate, with 87% as first lien debt holders, meaning if the borrower is unable to raise enough money from sales, then it is paid in collateral. This is good, since it can provide some type of asset if things go south, or it could cause payment issues. They also have highly diversified investments with 125 different companies. Average investment size around 9.4 million. Let's take a look at some of these investments. When investing into business models, always make sure that the companies they are invested into has a great location. Look at this furniture store, surrounded by golf courses, food places, Walmart, and more. This tells me that that location has high traffic. Another example is Provation, is a provider for healthcare software, serving hospitals, surgical facilities, and more. The location is downtown Minneapolis. Also provides high traffic. Now that we know about Pennant Park, should we invest? After crunching the numbers, this is what I came up with. Keep in mind, this is my own opinion and it is not financial advice. I started by calculating the United States inflation rate average to see if Pennant Park's revenue is increasing with inflation. The average US inflation rate past 5 years, 3.82%. 2019, Pennant Park had a 3% rate, which is not enough. However, the recent years seem to check out. From 2020, their revenue did drop from 96 million to 83 million in 2021. As an investor, this needs to be investigated. Did a company pay off their loan? Excessive risk taking? Regulations and policy errors? Missed payments? These are a few questions to keep in mind. Looking at the income statement, we have the operating income. Personally, I like to see an increase year after year. I calculate the operating margins by taking the operating income and dividing it over the total revenue. This shows us how much profit a company makes on $1 of sales after paying wages and raw materials. The formula is best used to compare with competitors, but the thing you want to look for is consistent operating margins and avoid inconsistent margins. So this checks out. Next, we have gearing ratios. Total liabilities divided by total assets. PFLT has an average gearing ratio of 57%, which implies that 57% of their assets are financed by debt, while the remaining 43% of assets are funded by equity. My personal preference, aim for stocks with gearing ratios 35% and below. This ratio should be used to compare with other competitors to see if the percentage checks out. At the time of this recording, Pennant Park's stock price sets around $12 per share. So let's find out if it's a good time to invest. I started off by calculating the DPU, or the distribution per share, by finding the average dividend from the past 5 years, which is 1.14. Next, I figured out a compensation rate plus an uncertainty rate of the stock. Using the IXG index and its annual yield for my compensation rate of 3.5% and an uncertainty rate of 5%. I then divided 1.14 by 8.5% to get a market value of $13. I also ran a NAV formula to double check the value. I took the stock price and divided it by the net assets per share at 12.21, then subtracted 1. I found out the value of Pennant Park is negative 7%, meaning that the net assets are worth more than the stock price, so it is trading at a discount. I don't think Pennant Park is a bad investment, but I do see some concerns within the company. I would like to see some gearing ratios 35 and below, increasing operating margins and revenue growth year after year. But that's not to say PFLT couldn't hit these numbers in the future. But the question is, are you willing to take the risk? And do you believe in the growth of the company? Thanks for watching, and let me know your thoughts on Pin It Park.